These numbers are so big, it's very difficult to understand. It's adding another economy somewhere between Italy and France every year.
There is an increasing focus, Colin, on physical risks and adaptation resilience, partly because those risks are becoming more visible.
Hello, I'm Colin Ellis, and this is The Big Picture. We're recording this podcast today a little bit ahead of the COP30 meeting in Brazil next month. And to an outsider like me who's not intimately involved in these issues, it does seem like the financing gap, the amount of money that we should be spending to address climate resilience, but we're not actually spending it yet, that gap just seems to be getting bigger and bigger over time. And the challenges seem to be getting bigger and bigger as well. So to talk about that today, I'm delighted to be joined by two of Moody's heavy hitters, Rahul Ghosh, who is a managing director, indeed leader of our sustainable finance franchise. Hello, Rahul. And Marie Diron, who is the global head of our sovereign and sub-sovereign franchise, and fresh off the plane from the IMF World Bank meetings last week. Hello, Marie.
That's right. Hello.
Thank you both for joining me today.
It's great to be here, Colin. My first video podcast. I'm looking forward to it.
I think it's a first for all of us. We'll see how it goes. I mean, Rahul, maybe I could start with you. Just pretty basically, what is the significance of COP30, particularly for credit markets?
Yeah, so we're here today to talk about the somewhat grandly termed Conference of the Parties to the UN Framework Convention on Climate Change. Bit of a
I can see why they use COP for that.
Exactly, known to our viewers and listeners more commonly as COP. And essentially, it's the annual gathering of policymakers to set the direction for climate policies in the year ahead. And in recent years, we've also seen participation from business leaders, finance leaders, leaders from civil society. This year will be taking place in Belém in Brazil. So slightly different for Marie and I, who will be going from the wet and windy London that we find ourselves in today. And I think it will be important for a couple of reasons. Firstly, COP30 marks 10 years since the Paris Agreement. And so there is really an obligation on governments and signatories to put forward more ambitious climate targets going forward. Secondly, this is the first COP hosted in the Amazon. And so you're likely to see in the agenda an increasing interplay between not just climate, but issues like nature, biodiversity.
And is that what you expect the key themes to be this year, or do you think there'll be other stuff that's wrapped in there as well?
Yeah, I think the sort of 3 or 4 key themes. So firstly, in many previous COPs, we've seen a focus on fresh and new commitments. I don't think that will be the case this time around. I think the Brazilian presidency will really focus on implementing existing pledges and a lot more of a focus on things like repeatable financing models and roadmaps. Secondly, climate finance for emerging markets. I know Marie's going to talk about that in just a moment. We still face such a huge gap, and there'll be a focus on how do we mobilize more capital. Thirdly, some emerging themes, adaptation and resilience. Many of us were in New York Climate Week just last month, and adaptation and resilience is really emerging as a central theme in government plans. But also, as I mentioned earlier, these emerging themes like land use, agriculture, and the blue economy.
Okay.
Now, the question is, does this matter for credit markets? It sort of matters, and you can also overemphasize its importance. I think COPs help set the signal, but ultimately it's about national policies, incentives, investment pipeline that will really matter for credit. And let's not forget just traditional credit factors like global macro, interest rate environment, viability of technology. These are all going to be the factors that drive climate investment going forward, as well as the COP signals.
But to your point earlier, then it would be really interesting if we do see this COP moving from the commitments, the announcements, to the implementation. Then that's where we can start really with credit analysis and really going deep into that.
Absolutely.
I mean, there's a lot to unpack there, I think, the two of you have just set out. But maybe if we start with one of the big points about this kind of so-called climate financing gap, the fact we're not spending enough money that we think we need to on addressing these issues. How big is that now?
So the quick answer is that the needs are big. But to get there, it's helpful to explain first the 2 main purposes of climate investment. One is transition, moving the global economy towards net zero emissions, typically taken as by 2050 as an objective. The other is adaptation. Climate is changing. We see the natural disasters, the increasing temperatures year by year. And so populations and economies need to adapt to that, to become more resilient to them. On the transition side, the needs are estimated at really essentially more than doubling what the world economy is already spending on reducing carbon emissions.
So what are we spending now, and where do we need to get to?
Last year, it was $2 trillion.
$2 trillion, right.
And the estimate is that this will need to increase to around $4.5 trillion by 2030.
2030, okay.
To give you an idea, maybe because these numbers are so big, they're very difficult to understand, it's adding another economy somewhere between Italy and France every year to the world. So that's a bit of a size there. On the adaptation side, the needs are much smaller. We're there in the hundreds of billions of dollars, around 350 billions of dollars that are needed. The issue here is that it's very unevenly distributed.
Yep.
So for advanced economies, it's really not much of a need, but for emerging markets, it's 1 to 2% of GDP every year. For small island economies, it's all the other 10% of GDP or so. So that distribution is the challenge on the adaptation side.
I mean, the trillions numbers are often hard to get your head around, but one area that I like to think about is the opportunity costs, right? So if we think about the numbers that Marie mentioned, around 1.6% of global GDP annually is the gap, which perhaps doesn't sound like that much in relative terms, but those decisions have to be made against a backdrop of funding needs in many, many other places, whether that's defense and security notably here in Europe, but also in many emerging markets, priorities around education, around healthcare. And so that's where the spending and the constraints on certain balance sheets becomes, much more pertinent in the discussion.
I mean, just to add to that, so there are difficult choices to be made. Resources are finite. What best to spend them on? At the same time, when we looked at that for sovereigns, we also saw that it does pay to invest early, because a late transition is likely to be more disorderly and more costly. And by investing early, it is first losses avoided in the future, and it is benefits that can start to accrue earlier. So we found that in particular in Asia, there's really a number of economies where it would make sense to really front load that investment.
Okay. When you talk about the focus on kind of adaptation and resilience that we're likely to see in this COP, part of me is wondering, well, is that because we didn't invest early enough and far enough 10 years ago when we had the Paris Agreement? Is this kind of track record of having this financing gap for a long period of time, is that what is driving this focus on adaptation and resilience? Because we've missed the boat.
So there's certainly a clear interlinkage between the transition risk piece of this story and physical risk and adaptation resilience. But frankly, a lot of the changes in our climatic conditions that we'll see over the next 20, 30, 40 years have essentially been locked in from emissions over the last 100 or so years. Right. But there is an increasing focus, Colin, on physical risks and adaptation resilience, partly because those risks are becoming more visible, and we're seeing those risks translate into economic losses, whether take the wildfires that had a devastating impact in California last year, for example. And it's a particularly important story for emerging markets because they tend to be more economically exposed. They have sectors like agriculture and tourism that are more vulnerable to risks like extreme heat or flooding or wildfires. But they also have lower levels of resilience, whether that's insurance penetration in those markets, or in many instances, more constrained sovereign balance sheets as well. So just to put that into perspective, what we call the global protection gap, so that's the economic losses from natural disasters that are covered by insurance, globally they're around 57%, that protection gap. But in certain emerging markets that are heavily populated and face extreme risks, that can be as high as 90%. So that's putting a lot of potential strain on households and businesses.
And that's a kind of private sector insurance gap, I guess. That's kind of private insurers stepping in to make good or offer people funds in the event of something bad happening related to climate.
Absolutely. And so that's putting pressure then on the governments in those most exposed markets to step up. And financing at the moment is still pretty small. So Marie mentioned around, I think it's $300-400 billion additional needed annually. We're not at $100 billion today in the amount that's being spent. The bankability of adaptation resilience is much lower, so it's more difficult for the private sector to find investable pipeline.
That's really interesting. I mean, part of me kind of wonders if this is a kind of private sector lack of protection issue, there might be a bit of convergence in a bad way, right? Because in many emerging markets, we know that asset management industries, insurance sectors are pretty small, certainly relative to advanced economies. And yet at the same time, we've seen insurers in the US, for example, retreat from offering insurance in certain markets because they don't feel able to cope with the climate issues and other factors which are at play. So it's not necessarily a very positive picture here, which then leads into the question, how are we going to fund this then? How are we going to find the extra money? What kind of innovative financing solutions do you think people are going to be talking about?
So, as you said, I'm fresh back from DC, where we had a number of meetings, in particular with multilateral development banks, and they are really key actors in this domain, looking at mobilizing their balance sheet more effectively towards climate, towards development in general, but towards climate in particular. Really, I would describe the approach by MDBs as no stone left unturned at the moment. There's really measures to look at deploying their capital more effectively. Give you an example, the Asian Development Bank has secured guarantees from their shareholders that provide that first loss across the portfolio of lending for climate purposes. They have secured, as of May, I think they had secured something like $2.3 billion of guarantees. They leverage that allows them to increase lending by around $10 billion. In general, MDBs have really increased their investment in or lending towards climate. So currently they're lending around $140 billion.
Right.
That's double what they were lending just 5 years ago. So really that pace is increasing fast. Again, we mentioned much bigger numbers at the beginning of our discussion today, but the pace is there.
Well, I was going to say, Marie, 140 billion and the pace of increase has been very encouraging, but it's versus a $2.4 trillion investment gap. So it's only going to be part of the story, Colin. I mean, maybe one other trend that I'll speak to is the increasing importance of sustainable bonds in helping fund the gap. The market's been well established now. It's a $1 trillion global market for sustainable bonds. And we are starting to see some innovation in that space around new investment themes, things like green mining or even energy efficient data centers to try and decarbonize some of this huge investment in computing capacity that we're seeing. But also new innovations around the labels. So one of the big trends that we're seeing has been the growth of blue finance. So investment to specifically focus on water stress, marine diversity types of projects. And also things like sovereign sustainability linked bonds. So governments linking their financing structures to explicit commitments that they have around climate. So the label bond market, again, is not going to be the full magic wand here, but it will certainly play an important part in the financing story going forward.
I guess that also presents kind of challenges for us or forces us to look at things in a new way, right? Because we rate to the contractual obligation. So if some of these aspects are written into the agreement between creditors and borrowers, it's going to keep you busy, I guess, in terms of your role.
Yeah, it's certainly going to keep us busy. I think we continue to think about what are the data, the metrics, the disclosure that we need from issuers to really capture transition and physical risks in our analysis. We are seeing better and more consistent disclosure around things like transition plans and increasingly adaptation and resilience plans as well. But we're also seeing these entities come to us when it comes to their sustainable bond framework. So a great example would be the Tokyo government that recently launched a pure climate resiliency bond to help raise financing for natural disaster preparedness. And I'd expect to see more of that kind of activity going forward.
On that theme of innovation that is relevant to credit, we are seeing both MDBs offering pauses for in case of natural disasters on the payments of their loans.
Okay.
And we have seen sovereigns issuing bonds with, again, embedded in the contract, a pause on payment in case of very defined kind of climate disasters.
Maybe a final question before I let you go, because obviously, I think as you hinted at the start, sometimes these COP meetings have a bit of a flavour of where they are. And obviously, being in Brazil and Latin America, do you see any kind of opportunities or particular types of innovation that might be highlighted from that region?
I think for me, it relates to one of your first points, Rahul, the fact that we are likely to hear more around nature-based solutions. I was looking at Brazil's emissions. It's really striking that 50% of the country's emissions come from agriculture, land use, forestry. Very different from a lot of countries where a lot of emissions come from the power sector.
Yep.
Brazil's power sector is renewable, largely. So I think there is that focus. It is a challenging area in terms of identifying not only the financing, but also the technology solutions. And I know I saw earlier that New Zealand, which has a similar pattern of emissions towards really land and agriculture, has scaled down the size of its ambition in terms of emission reduction. In part, I think, because the technology solutions are not readily available yet.
I think that point on the emissions profile is really important, Colin. And then putting that back to financing, Latin America has always punched above its weight when it comes to sustainable bonds. So about 1 in 5 bonds issued in the region has some form of label on it.
Okay.
We've seen a lot of innovation. So the first sovereign sustainability-linked bonds came out of Chile and Uruguay. And many jurisdictions in the region are working on what we call taxonomies. So classification systems for what is an eligible green and sustainable activity. So that dynamism is, I think, going to continue in the region and really put the spotlight on both environmental but also social objectives that they want to achieve.
And I guess we've all got to hope that some of that dynamism kind of transmits to everybody else who's there for COP30, and then they take it back home with them with a bit of luck. So we're going to have a lot more information on these topics on our website, but also on our social channels. So please stay tuned to Moody's, and I'll see you again on The Big Picture.
By downloading or listening to this podcast, you are agreeing to Moody's legal terms and conditions found at moodys.com/disclaimer, including that the information provided is not investment or financial advice, and that Moody's will not be liable for losses arising from your use of the information.